coming to the market are beginning to get some traction.
All right, Rishi, we'll leave it there today. Thanks a lot for joining us. Good talking to you, and all the best for your, for your future. Let's move on then and address the stock of the day. That is Sun TV, and that was good numbers in the context. Look, I mean, all the numbers have to be looked at in the context of the kind of COVID world that we are in. We have SL Narayanan now joining us, Group CFO at the Sun Group. Mr. Narayanan, good morning. Thanks much for joining us. So, your numbers are good, especially on subscription. It's been quite decent. If you could tell us if this trend could continue, and in the next 2 months we'll have IPL as well. So, do you see more visibility?
Morning, Anuj. Thanks for hosting me this morning. Yes, I think you're right. In the circumstances, I think we have delivered an extremely satisfactory set of numbers. Advertisement revenues, unfortunately, bore the brunt of this COVID thing. I mean, that's something which is inevitable. But you're right, the subscription revenues have been sizzling. And we are extremely happy that we built a business which has multiple cash flow streams. So while advertisement revenues degrew by almost 65% during the quarter as compared to the same period last year, our subscription revenues, particularly on the digital side, grew by 34%, and DTH revenues have grown by another 5%, despite the lockdown-induced delays in recharge of DTH coupons. So we are extremely happy with the way the quarter has shaped up. You need to also see the sequential quarter numbers. In March, we did about 250 crores of PAT. And in June, it's actually risen to 282 crores, which only goes to show the power of our library, where we're using recycled content and the considerable list of titles that we have from our library. So all that pitched in and saved the day for us. And same time last year, we also had IPL contributing significantly to the quarter's numbers. This time around, we didn't have it, but it seems like we may still earn some revenues because the tournament is going to be underway during the current quarter, and it'll slip into the next quarter as well. So we are keeping our fingers crossed. With a little luck, we may post a decent set of numbers from the IPL side as well.
Good morning, Mr. Narayan. Always good to have you with us. In a sense, your company and ours sail in the same boat in terms of, ad revenues. I noticed in your conference call, you're saying that ad revenues are currently at 75% of pre-COVID levels, which means they've improved from Q1, but you will still fall short of FY20 levels. Why only medical and pharma and healthcare, as you point out in your conference call? Would not more people want to use the television medium to reach out at a time when they can't sell, say, their insurance agents or even to sell cars and two-wheelers? Would you be a little more enthusiastic about ad volume and rates?
You're absolutely right, Lata. In fact, you hit the nail on the head. But then, we are still, looking at this whole situation with a lot of guarded optimism. I don't want to oversell the story. You're right. Our ad revenues are now running at almost 80% of the pre-COVID levels. And with a little luck, we may even post a decent number for the full year, because we're getting into Onam in Kerala, and then we're getting into Navratri, and then we'll get into Deepavali, and then Christmas, New Year. So if the lockdown were to, decelerate in terms of its intensity, and slowly but surely everything else gets opened up, I suspect there is a huge pent-up demand which will come and, surprise us positively. But we don't want to, prematurely give any guidance. But I do share your optimism in terms of the other sectors coming in and contributing. We were surprised by the kind of traction we saw from all health-related verticals, including insurance companies, because they have not been very strong in terms of spending on vernacular television. I mean, these top life insurance brands are normally seen on channels like yours and other English language channels. So we've had a lot of traction coming from health insurance, life insurance, hand sanitizers, personal hygiene products. So, and then of course a lot of new customers from the e-learning and e-commerce verticals. So net, it doesn't look like what it was 3-4 months ago when it almost sounded like a Namageddon event. We're definitely in a better place now. And because we will not have much of amortization charges hitting us because there are no new movies to buy and therefore expense, our net income as reported might not fall this year. That's my view at this time.
Okay, got that. Mr. Narayanan, good morning. I wanted your thoughts on what's happening in the digital space because Sun Next now has almost 17.5 to 18 million subscribers, and digital revenues are growing at 100% year on year. But I want to understand from you, is it become a bit of an overcrowded, saturated space now? Because every other day you're seeing new OTT platforms pop up. And what kind of opportunities do you see going forward? And will it be tougher to break even now given the competition?
Sonia, actually, this whole space, is of course very attractive because it's a new idea and the runway ahead in terms of growth is enormous. And therefore, it's attracting a lot of investments. But the very crucial, or rather the only differentiator in this space is access to content. So I think a lot of the smaller players who are building a business based on syndicated content, i.e. they're paying money and they're getting rights to show movies for a limited period on their platforms. That's not a sustainable model in my view. Unless you have proprietary content and you have oodles and oodles of it, there is no way you're going to win this race. Because this is a business which thrives on, diversity in programming. So it's not just movies. You need a lot of other shows, originals, documentaries, infotainment, plus linear television. So I have a feeling that this overcrowded situation that you're seeing in OTT might not last for too long.
Oh. Okay. Actually, Mr. Narayan, that was going to be my question as well. The whole game may shift. While television may capture space from, the likes of PVR and Inox because people may go to theatres less, there is huge competition here. Can you give us some idea, like 2 years down the line, how things might look? Will this turn into be first break-even and then a big money spinner?
Where and how each operator will break even is something very, very different from case to case. We've been extremely cagey about committing, big sums of money because it didn't present a business case 3 years ago when it launched. So we've been extremely careful with our money. But right now, because we are making some serious gross margins in this business, we are now in a position to commit at least 150 crores per annum into creation of originals for Sun Next. Unfortunately, because of this COVID situation, the launch of our originals has been significantly delayed. Thankfully, the serials are now back in process. But shooting a movie is a different ballgame altogether because at least 200, 250 people in a closed space. It's going to take some time before normalcy returns. Our own blockbuster movies are 50% complete, and we don't know when we're going to resume those. But in good time, normalcy should be back. And I think we will see at least 150 crore plus investments that we'll put into Sun Next, because that's the kind of money that we are making today.
Okay. All right, we'll leave it at that, Mr. Narayan. Have another chat on a more relaxed day. Thank you very much indeed for joining us. Well, it's got a lot of upgrades. The stock, IDFC Securities prices it at 488, Moti at 500. So CLSC, I think, also has a reiterating by 490.
And it's got valuation by